Hey everybody, Boris, welcome to the weekly technicals for October 17th to October 21 for the majors: euro dollar, dollar yen, pound dollar. It's been the really story of Dollar Express last week. As a matter of fact, on the close, we closed at the low of the day, low of the week, low of the month for the euro as the dollar strength just continued basically uninterrupted, with U.S. yields now starting to really move up higher, and that's really been the primary driver of where the dollar is going. The market is pretty much convinced at this point that the December rate hike is a done deal. Of course, there's still always a possibility of a doubt and still always a possibility of unexpected events that could make the Fed hesitate. But for now, given the fact that U.S. rates look like they're starting to inch up with high degree of confidence by December, the difference between the monetary policies between the dollar and most of the other majors is really starting to come to the core, and that's why you're seeing the dollar begin its rally in earnest. There's a lot of counter argument by dollar bears saying that even if the Fed raises rates, it's really going to be a very slow path forward, and it really will be. As a matter of fact, Chairman Yellen basically said on Friday that they will very likely not going to raise rates at a normal pace of like once every 2 or 3 months. Going forward into 2017. But even if you sort of assume that it's a once every 3 to 6 month rate hike, let's say there's just another 50 basis points priced into the yield curve in 2017, that's still considerably more than anywhere else in the world. And it still puts the dollar on a relative strength path. So we'll be watching that very carefully, but I think the big story last week was the breakout of the dollar move. And this week we have quite a lot of non-US data that's really going to possibly impact the market. First and foremost, of course, we have the ECB meeting. It's going to be interesting to see what Mario Draghi says. Certainly, Mario Draghi has been a lot more hawkish in some ways by saying that most of the QE commitment that they've done is pretty much over, or to the extent that they're not going to they're not going to extend any further QE commitment. There is some data on the European side this week, not much. The really big data comes out next week with IFO and flash PMIs. One of the possible positive movements in the Eurozone could be the fact that the lower euro is starting to help the exporters, so there could be less need for stimulus coming from the monetary policy. All that could potentially provide a bounce for the euro off of these key lows that we're approaching. But we are approaching some very, very key lows, and it's going to be very much worth watching for us as we go into the week. As far as dollar yen goes, we broke out this 104 level. Really, the single most important number for dollar yen is going to be 105 this week. The 105 is a critical resistance level, and a break above that would really solidify the point that dollar yen is now in a firm uptrend move. And for pound, it's really just the Brexit bounce, or I don't even know what they call it, the Brexit seesaw, because pound at this point is a basically 125, 120 trade with lots and lots of political commentary coming across the wires. As a matter of fact, the latest threat came from Angela Merkel over the weekend, saying that essentially, if the Brits are unwilling to compromise on the issue of immigration or free movement, basically the issue of free movement, they're not going to get any free trade. And I think that certainly puts the pound under still a tremendous amount of pressure. Although, having said this is the interesting point. We're going to make some interesting ideas this week as far as cable goes. Purely on a technical basis, what we're seeing is that cable has really kind of stopped going down, and that perhaps may give us a little bit of a pause for sort of any positive news could certainly spur a short covering rally in cable. So the key levels this week for us to watch in the euro, we're now down to this 109 resistance, to 109 support, which is very, very key post-Brexit spike low, and that's really going to be the point where either euro makes some kind of a stance, or we could really just crush and crumble into fresh lows. Dollar yen 105, as I said, very, very big resistance to the upside, and the pound, this whole 120, 125 level bounce, but within that, there's a potential here for possibly small rise back up towards the 125 level as the week continues, if we get any sort of positive news. We also have, of course, a slew of UK data, which could serve as a small catalyst for positive news, because generally UK data has actually been quite strong because of the low cable, giving it a tremendous amount of stimulus in the economy. Let's take a look at the charts here and just see where everything stands. So here's the euro. This is the key thing. I think, we closed the week, as I said, on absolute lows. Technically, that's a very, very negative sign, but it also suggests that we're now coming into this very critical support level. Let me see what this is. This is basically So this is 109.50, and then the post-Brexit low is around 109.11. Effectively, this whole 109.50, 109 level is going to be the very big battle. And if it isn't, I mean, if it just slices through 109s like a bread through butter, then that's a very bad sign that euro is really technically in a much more negative construct than before. So you can see the whole full unwind. We're right back down to the key lows. And at this point, of course, any bounce should likely be very anemic. Perhaps the ECB presser will give us a small bounce on the fact that ECB is unlikely to do any further QE. But at this point, I think they're quite content with the fact that the euro is 110. It's a great exchange rate for them. It's very stimulative for Germany. I don't think Draghi wants to do anything to address the euro's weakness at this point. And very likely, I think any kind of a bounce here is very much a great opportunity to sell. I think euro in many ways is really sort of a sell the bounce trade here on any pop back above 110.50 or so. So at this point, this is really going to be the key watch, the 109.50 to 109 level. As I said, if that doesn't hold, it really creates a much deeper, much stronger move, possibly all the way out to 107 in the near term. Dollar yen, on the other hand, this is the area that needs to be broken. I mean, we've tested the 104s 5, 6, 7 times. We've come back. It's been a very great battle between the bulls and the bears, up and down, up and down, up and down. I think in some ways it's sort of very resilient to the fact that we have tested resistance and come back up towards resistance at the 104 level. But to truly confirm this is a big move, we need the 105 taken out. It's going to be interesting to see if we have the power this week to continue the squeeze in dollar yen to the upside. One of the more sort of frustrating things I think that can happen is if we just can't get the power above the 105, you will see a much swifter and stronger a decline in dollar yen as all of the profit taking just kind of bails in. At that point, support comes in clearly at the 102 level, and then a little bit at the 101. Overall, it still looks generally relatively positive on a longer term basis. You have a very, very defined, very clear W bottom here. It's just that we are at these levels where it's kind of a do or die situation, because this resist point has been a nagging point for the last 2 or 3 weeks. And to definitively confirm that we do have indeed an uptrend, a break above 105 would be quite good. A break above 105 would really suggest that any dip is a huge opportunity to buy, because at that point it's going to be the what is former resistance is going to become present support. So this whole 103.50 level will become the support level off of which you're going to be able to buy any of the breakouts on a pullback. And then last but not least, this is what I'm talking about as far as cable goes. Now, cable, of course, is very exaggerated because of high volatility moves. The chart just looks kind of almost unbalanced. But what is interesting is that what you're seeing here in cable is after the flash crash lows, which let's just say we mark them at around 120, 119, 120, we have not made, first of all, none of the fresh lows, but more importantly, over the last 4 days, if you look at this, the low here is 120.89, low here is 120.104, the low here is 120.132, and low here is 120.167. We have effectively a series of higher lows for the last 4 days, which possibly sets us up for a short squeeze, maybe all the way up to the 24.50, 25 level. At that point, 25 really becomes a very, very strong resist point. But as I said, either small amount of positive economic news, but more importantly, any sort of compromise on the political front would certainly provide a short covering squeeze here in cable. And that's how the week shapes up as far as the majors go.